All right, that's running. Potential is there, it's always there, especially once we see it play out. Unfilled volume imbalance and a potential new inversion fair value gap. And Q didn't take out the Asia buy side yet. Yes, that neither. I wish we would have taken that out, then it would have been a little bit more, well, then it wouldn't have been a question. But I want to see the setups form at the low of the day. Not roughly at the low of the day, from the low of the day. So I want to see the sell side being swept. Otherwise, yeah, there's just too much reason of it just pumping up and then coming down. Hope that makes sense. So that's why, if anything, we would have played it on NQ. If you trade NQ, entry right on the breaker block, we only touched it. So maybe with luck, get filled here. Usually, from my experience with Apex or the future funding firms, that wouldn't be an issue most of the time, depending if they open up the spreads even for futures right after the news, to make sure traders don't get in on a potential move, or you simply market execution into that. Let's see if we leave that volume imbalance unfilled, because 99% of the time we fill them, open up with a new one without even filling the old one. But we didn't close above the bearish, so we can't use that as an inversion just yet. Now with equal high buy side, right here. Let's get rid of these lines. Most important thing I'd say to understand right now is to know that the ship has sailed. Train has left the station. If you don't get in here around to 50% of the daily range, you're buying in a premium. Might still work, depending on your risk management. There's no right or wrong, just from my perspective. I'd be waiting for some structure to form here now with our market structure shift. A fair value gap entry, and I'd take that short. So now we filled this upper inversion, volume imbalance. Let's see if we also want to retrace into there. .5 points. 1-to-2 risk reward ratio. Not for the Topstep, not for the funded, but to practice, I'd say that would be a fair play. Because eventually we're gonna fill that. Ideally on the move to the upside. Good morning, YouTube, or good afternoon, depending on where you're watching from. The Discord live stream without ads and without delays, which is usually only open for the VIP members or the live stream pass members, is open for everyone today. So if you want to join the YouTube, the Discord live stream, make sure to click the link in the description right here. Join us on Discord, and then you can sit in here with us live. Right, if you hop over to the audience. Make sure to not play with the buttons of the music board. Are you in a short? Do I see that correctly? Or are you in long and use partialing out? I think you're in a long, partialing out. Nice. At the extremes. Let's check our trade day leaderboard. Did we get a new join? Where is it here? No, we're not going to leave it like this, Manta. Because we're only one invite away from scoring top 3. Let's go. So make sure to use either the link here in the live section to simply quickly join their Discord, or on our Discord server itself. Let's go back to our chart. Not filled just yet. What's the time? It's 8:50. I think by 9 AM we should have taken that high. 2, 1. Okay, we don't close above, we only open above. So theoretically we could look at this bearish fair value gap as an inversion fair value gap. But we keep opening up with volume imbalances, and they remain open too. Those are good signs for continued bullish order flow. Let's see if we break these equal highs from here. And this is what we would normally anticipate from a volume imbalance. We open up with the gap, we retest the previous candle's closing price, and then continue into buy side. We didn't do it here. Consolidated on the lower time frame. There we go. So buy side is done. More buy side would come in at 529.5. Above all these little short-term highs. If we go to the 15. Yeah, really. Only this one. 15-minute bearish fair value gap. But I'm going to be waiting for the New York Open. I think the main objective has been hit from the low to the high. On NQ, same stuff. We hit the Asia buy side liquidity pool. That's done. At the beginning of the stream, we talked about the opportunity. I said my bias is short. The only thing against that is that SMT divergence between ES and NQ. That NQ didn't take out the Asia session buy side and ES did. Most of the time, just from enough screen time. That's usually when we fake traders out and actually end up taking that buy side liquidity. We had bullish SMT divergence now at the lows, market structure shift, and maybe you got lucky on the fill. Right here, we placed our limit order long with our paper trading account, but we didn't get tapped in. Our safety stop loss was below the SMT divergence. If we see an immediate rejection here and we close somewhere down here, we can still cut our risk early, because that's not the ideal scenario that we would be anticipating really. But eventually it delivered 30 points perfectly off that breaker block. Did we take this slow? We left behind perfect equal lows right here from Tuesday 2 p.m. Thursday 8 a.m. which still kinda lines up with my bias for continued shorts. Especially because ES left that sell side behind. We have equal lows at the low on NQ. Let's see how this 5-minute candle is going to close. Let's go. On to the market makers today, H and Smith. Okay, so we close above the high and open up with a bearish volume imbalance. Really no point in looking for continuation longs after the main buy side pool has been hit. Could drop it down to a 1-minute time frame and do some tape reading if we want to. It's also 9 a.m. so this is a new hourly candle. We made sure that we hit the objective before the new hourly candle comes in, and we open up with a bearish volume imbalance. Looking at the 1-hour time frame so far today, very similar to what we saw yesterday. Just up and down movements on the hourly without it really going anywhere. I mean, at least here on Monday we didn't see the biggest range, but at least, yeah, we saw clean trends even on the hourly. Couple of continued up closing candles, down closing candles, up closing candles, and then PM session chop. On Tuesday, CPI, pre-CPI at least. Asia consolidation, London nice trend. Dump back below the low. We already covered that on the Tuesday's live stream. Then we had the CPI news pump up. After such an extensive pump, we wouldn't really anticipate smooth price action like here on Monday. And we only saw down closing candle, up closing, down closing, up, 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 down, down, up, down, down, up. Similar to today's London session, 2 a.m., down closing, up closing, down, up, up, down, up. Now rejecting from the high of the day. The 15-minute also closed above buy side. So let's see if we want to use this overall. We already dragged that over to the left. And we can say fair value gap support or inversion fair value gap support, but the more we drag it over to the left, the more we see that it has been used as an overall support resistance area. Nothing wrong with that. Just gives us more confirmation. So that's a little paper trade. If we continue higher, I try something like this. 2.5 point stop. Because I don't want to see it revisit this lower inversion fair value gap. I want to see this being used as support and ideally filling this left behind volume imbalance. We haven't delivered that one efficiently yet, and usually what we do with volume imbalances is that we retest the previous candle's closing price, like right here. We open up, retest it, and then continue lower. In case we want to fill that. But right now, even just an entry up here on these two volume imbalances could be justified. They remained open. Could look at the 50% of our inversion. Just for the experience. For my funded accounts, I don't really like to trade into the extremes. But for practice purpose, let's try that. New hourly candle, right here at 9 AM. If we see the close below the inversion, and particularly this volume imbalance, unfilled volume imbalance, I'd cut the position. The 8:30 open comes in all the way down here. Take a look at NQ. So we hit the volume imbalance. 30 seconds to go on the 5-minute candle. If we keep on delivering, really respecting PD arrays, we would expect to hold support here on this inversion. That's what we did right here. We close above our bearish fair value gap. We're filled with both now. Let's see if it wants to hold, otherwise I cut the trade immediately. Yeah. Not what I want to see, even for the paper trading account. So I prefer taking that small loss. We didn't just close below all these volume imbalances up here, we also closed back below the inversion. Does this mean we're immediately gonna go short? Maybe. It just means that I don't want to be involved because the risk to more downside is there. And now we would obviously expect resistance from that overall area again after rejecting it immediately. Closing below. Hard to come up with some market structure really here, except for the 1-minute time frame. Here on the 1 minute, we kept on making higher highs. So first leg, second leg, third leg right after the news, followed by a little bit of consolidation. So really what we did just here was retesting the breaker block, holding perfect resistance. So just based on that, yeah, lower prices could be imminent. With our 2022 model on the 1-minute time frame. Paired with the new hourly candle inside the macro. Market structure shift to the downside, lowest down closing candle. Old support turn into resistance. A target at least this sell side right here and this sell side from our 1, 2, 3 drive setup. Might have seen that too late on a 1 minute time frame to get filled. We will see. Just trying to warm up a little before New York opens up. And to warm up, ideally you do that with an account where you don't put yourself in trouble, or your funded account. It's a practice account. I hope you guys have already joined the trade day server here using that link. No, not trade day. Invite leaderboard. Did we make it to top 3 yet? No, still not. One person is missing. 2 more or 3 more, and then we're up on rank number 2. I think we should really be able to do that. Come on, guys. Then we can host a little giveaway here on the Discord where everyone can participate. 15 people already did. Okay, we see that, we get that, we understand why we reject from here with perfect precision based on the 1 minute breaker right here. Target sell side right here and right here. We can't guarantee that we're just gonna drop from here and do the ultimate pump and dump. Go down, go up to go back down. To trap longs now. News longs into the market. But we said that if we see the close below this volume imbalance right here and this inversion fair value gap, lower prices are possible, or are more possible than if we would have kept rejecting from here. And just based on that understanding, we can immediately cut our risk without taking a full stop out, which is really unnecessary. And that's just, I'd say, appropriate risk management. This way we only lost $87 using 2 mini contracts during the New York session. It's 9 AM. It's rather volatile. It was worth a try, but it's not worth getting in here and saying, no, but that might still reverse and I might still end up in profit. Let's move my stop loss further. Let's average in, buy some more to the downside. If I'm right, I'm gonna be in big profit, and I funded my account. It's retracing deeper. Let's add some more stop loss here. Maybe put it at the low and add some more size until you blew the account. And this way we were already able to say, no, that entire long idea to now hold support around this old resistance, completely invalidated. Sometimes, I'd say, let it be 3 or 2 out of 10 times, even 5 out of 10 times. It might work out, but we're not here in the 50-50 game. And if we get the signs using or anticipating perfect precision, which we do oftentimes get, I mean, just look at NQ here, with that perfect wick here to the downside from the breaker block, after taking out Asia sell side. This would just be a bigger picture seek and destroy day. We have these equal lows, which could be a very nice draw on liquidity for later after the New York Open. We understand that at this point in time, shorts are super keen to get into this. First push, second push, third push to take out the Asia sell side. And psychology-wise, most people But I'm not really sure if they should get in on this first push, because we've been bouncing around this area. The second push, usually mostly the biggest one, is like, okay, now we're already down here. It's not really worth it getting in. We retrace. It's still like, could reject from here, maybe. But most of them jump in down here, and that's where they do the damage and completely reverse on them. So they're selling. Someone needs to sell for someone else to buy. That's what's happening right here. We hit the last stop orders down here, pour that liquidity, and immediately move away. Also with news impact, that helps to, that helps market makers basically to find an excuse for why we would take all these people shorts money, basically. Need an excuse for that. Ideally some news, and it just repeats the process. We can only get better at that. I mean, we placed the limit order right here on the breaker block, but only on NQ because it took out that low of the day Asia sell side, while ES unfortunately didn't. Equal lows. Next sell side would be right here below this volume imbalance. Below this 5-minute low. Check out the 15. Inside a pretty big 15-minute fair value gap. So an area where we could see support potentially after this London consolidation. Just looking at the highs right here. And to capture the lows, close above that, we displace, we shift structure to the upside. We even close above the high. But also understanding that most people try to get in long right here, and likely most don't manage their risk as well, and saying, okay, the long idea for me, at least right now, from this entry up here, is invalidated. You can always get in at a better price later on, once we take out maybe some more sell-side liquidity internally to go back up. But eventually, after hitting the match objective, most of the time what we see is a snap back into it to get rid, to shake them off basically. Imagine you have any parasites on your body, or like maybe your pet dog, I don't know. And every time you shake them off, you get some money, big money. That's what the market makers do. The music is gone. What's happening? I was trading with OTP when I started, doubled account in 2 weeks and lost it in 2 days. That can happen. Q ended. Let me put the button here without stop loss. Well, as we often say, fast money goes away even faster, or quick profits. But well, I don't know. That's Siri. No, thanks, stop. Okay, yeah. Well, I've been in that same scenario a couple of times. Like super excited. Not saying you have to be super excited about the profits. Just overall, I don't know. Most of the time, if you're not really sticking to the rules, especially when not using a stop loss, even when you're wrong. Yeah, all it needs is one bad day, then you keep on trading, and the entire profit is gone. Then you eventually want to make back that profit, making more damage. It's like if you want to stop smoking, for example, if you want to quit drinking, whatever bad habit it is, basically. All it takes to ruin a streak is one day. One little decision. So really getting that 100% consistency in is pretty hard. Unless, yeah, you just go with the flow in 2 weeks, you grab your payouts, get done, secure them, and then if you afterwards blow the account, well, so be it. You got your payouts, you've made enough return on investment to buy a new one and do the same thing again. If you want to put the volume of the music board down, simply right-click on it and change the user volume to your liking. You can also do that if you click on me. I just can't do that with myself. Fresh key, any trades yet? Continue lower. We spoke about the potential right here, and we knew we're gonna get out of our long, trying to continue with the trend once we close below here. Retested the break on 1 minute and snapped all this sell side liquidity right here. Now back at the new day opening gap. In Q similarly. Shake them off. But nothing on the 5 minute for me to engage on. Even this one right here, we spoke about the possibility of, like we did on here on NQ, using the breaker block as our entry for a fair value gap that would likely cost us too much time. Think about like, okay, we need 10 more minutes then in order to move quickly, and usually, especially once we have volume trapped to the downside, so shorts trapped to the downside, especially with news, which is a very good excuse to move the market quickly. Like, oh yeah, there were news. Sorry. You could have anticipated that. To snatch away all those people's money that were still short with their stops above all these highs. And on NQ, we also took the Asia sell side liquidity with bullish SMT divergence. We placed our paper trading limit order right here on that breaker block. But with paper trading, we do not always get filled. And so far, the daily bias is working out. The New York market isn't open yet, but overall, my daily bias was short, or still is. And we spoke about the possibility of getting one last run up because we saw that during London didn't take out the Asia buy side here on NQ. And we also had some SMT divergence just between those two highs. And typically when we see ES take out buy side, also that Asia session high, and NQ doesn't, we get a manipulation move back up into that. And if you're really confident it's a manipulation, well, nothing's holding you back from managing your risk well, of course. Trying to get in long, short, I mean. Target your 1-to-1, start trailing your stop loss. And if you're right, you can, bank a high risk to reward. If you're wrong, you just take the stop out. And if you get really good at that and also managing your risk well, then, well, small losses, usually bigger profits than your loss. Managing the risk quickly. If you would have seen that following candle immediately push back up, you could have decided to cut your risk early, because for the true manipulation, you want to see the immediate dump back down, like we, for example, saw right here during London, where we engaged on shorts. We saw the pump up. We took out the Asia high. We took out that 2 a.m. high. And we saw that we immediately stopped disrespecting any of the bullish fair value gaps right here. So we entered short on this first inversion right here. Had our limit order set. Respected it perfectly. Volume imbalance remained opened. We knocked into it 1, 2, 3, 4 times. But we really failed to continue lower. And at this point in time, we anticipated lower prices here, at least the sell side and the midnight level. But yeah, we just consolidated around the VWAP. And our stop loss at this point in time was 1 point in loss. So we took about $100 in loss using too many contracts, which is fine. We actively managed our risk the same way as I explained right over here, making sure that our winners always make more profit. No point in taking partials right here. If we would, well, we would make sure that our winning trades, because we take off profit really early, are most of the time smaller than our average loss. Assuming that we, let's say, for example, use a 3 to 5 point stop loss, and we always take profit before 5 points, or even just at 5 points, then you're just gonna land at a 1-to-1 risk to reward, trying to let some trades run. Understanding that we get our manipulation move and that we move back up into it, really beating the purpose of trapping breakout traders into the market, snatching it away from them, and then going back into that range. That's why I had my stop loss right here. Eventually, we still kept holding this bearish fair value gap, and we got stopped out right here. And yeah, really making it look like we can hold this area. We go lower, we snap back immediately, still respecting bearish inefficiencies, and then drop very quickly. Too late for most of the traders to even get onto that. Also outside the kill zones. One last time, drop it lower, use the news event to push it up. Unfortunately, without taking Asia sell side, otherwise I would have jumped in on longs right on this breaker block. But I do better if I stick to the rules, at least my rules. And Q, and that lowest bullish fair value gap right here. Already showing the same similarities that we saw during London right here at 4 AM with that move to the upside. And also note, when did we start selling off here again? Hourly candle open, 9 AM. Like we already said on the hourly. That's what we did yesterday. Bullish, bearish, bullish, bearish, bullish. Okay, a set of 3 bullish candles, a little trend, bearish, bearish, bullish, bearish, bearish, bullish, without really going anywhere. We saw the same thing happening today during London. An example for normal price behavior would be Monday, where we see a trend, a healthy amount of up closing candles here to get into a move. We change at 6 AM, reverse back up after taking the Asia low, and then during the PM we consolidated after snapping the previous day's high. CPI, we would anticipate really not too much, but for Monday this was really clean. Overall, to get back to my bias, it's this level right here. We drew it up at the beginning of the stream. 50% of the daily fair value gap, 50% of our entire weekly range. Right here, 50% of this entire range, 50% of just this bullish fair value gap. Looking forward to maybe get rejected here, forming some sort of a evening star formation. I know that's classical charting retail thinking, but well, I guess we got the manipulation. With that same A formation, or upside down V-shaped recovery, if we would invert the chart. V-shaped recovery after taking out buy side. Gap below the midnight level, not holding support on that fair value gap. Targeting Asia sell side and for NQ. These hourly equal lows that we snapped away from after taking Asia. Yeah, for me neither. But it would be interesting to, really improve in understanding what market makers are up to, and then I don't know, with that new hourly candle, of course not trade is going to work out, but if you're right, I mean, you could still check the 1 minute, and on the 1 minute, we already spoke about that, market structure shift, retested the breaker block perfectly to the tick right here. Then you could just follow it on the 1 minute. Do we see anything that's going against our manipulation bias, why we wouldn't hit, or why we wouldn't go back all the way down to the slow? Not really. We also tried a paper trade of this old support area, a resistance area, fair value gap, to use it as support to continue higher. And we immediately saw this new hourly candle here on the 5 close below the low of our inversion fair value gap and our bullish fair value gap, negating this entire idea for me, cutting risk early, taking a $80 loss on that paper trading account. Then understanding, okay, we might use it as resistance now. We checked the 1 minute time frame, saw the 2022 model, but at this time it was already too late. We never touched our flipped volume imbalance ever again. I think we made sure that none of these retail longs survived. Same way as we did make sure that none of the shorts survived with that quick pump to the upside. Understanding that now these traders are trapped, definitely. They FOMO, get excited, into this trade, breakout traders maybe even. Understanding that now if we should see the retracement all the way back up into here, we could be more sure that we go back above buy side, because if we do get into this area, we would offer late longs, like for example we did right here, that didn't exit yet, that's the difference, an opportunity to get out with at least a minimal loss around this area. And I think thinking in this way makes sense. Not everyone is able to control themselves and sit there so patiently, especially not beginners, especially. So understanding that if we push back above, we just shook off most of them, selling, they're long, they're selling into the hands of the market maker again to accumulate more and continue up higher. But I don't think it really fits the entire weekly narrative, with Wednesday putting in the high of the week, manipulation to the upside, equal lows below right here on NQ, Asia sell side left behind, and I think New York Open just happens right now, 9:30, missed that. Let's see, we still hold that midnight level. We can see NQ is already failing, taking that sell side. So while NQ is dumping, with what looked like dumping, rejected now. While NQ is pumping, ES is pumping back up. Set of equal highs right here. Still leaving Asia untouched. But I think the draw should be the Asia sell side. Even using this entire news manipulation to the upside as our fake out move. can see how nice these standard deviation targets line up with sell side and higher time frame objectives. So because we're inside the high and low of the day, no opportunity for me to get in on the trader account. NQ is pushing back lower if we check that out on a 1 minute time frame. Playing with the midnight level. Once again, moving away from it. 1, 2, 3 times right here. Respecting it nicely to the left. DXY rejected. Let's check that out on a lower time frame. Well, here on the DXY, kind of would anticipate this bearish share value gap to hold. Uh-oh, someone played with the music board. Yeah, S&P 500 and overall the indices right now at least, specifically this week, or maybe just now because I started noticing it, learning more about market maker concepts. Well, yeah, kind of more manipulated, might be just now that I'm becoming aware of it. Lo-fi, chill, mix, let's put it all in here. Don't play with these buttons, otherwise, if you want to change the volume and that's annoying to you, put it to 0. If you want to listen to a little bits of music, put it to 20, whatever you like. Ah, fuck off. Well, no charts in the meantime. If that happens again, I end the stream. Don't care. Or you push above, make a new higher high. Well, told ya. Where can I check who's doing it? We've hit the reset button, no one telling me who's doing it. Please tell me if I can. Yeah, well. Right now the stream is only open to VIP members on Discord. I trust the VIPs more about. Let's join. It's not like I'm gonna take a trade right away. I wait anyway, but still, just annoying. Get really groovy. Tell them not to. Well, someone's playing. Doesn't matter. Let's focus on the stream then, I guess. Alright, once again, we bounce off that midnight level. We bump into it. Just playing here, taking out the lows, taking out the highs. The stream is still running on YouTube. Nope. It's not valid at this point in time anymore. I think Apex right now only offers a 71% discount. Take profit or trade day. Well, I'd say watch the comparison. Really, it's up to you. Take profit trader. Once you're funded, you have to bother with a live trailing drawdown. While with trade day, it's still being calculated at the end of the day. So really, I'd say trade day overall ends up being the best one, but that really depends on your approach. Okay, so we push back to the upside after taking a low again, so we might just chop a little. 5-minute time frame. Take a look at NQ. Same thing here. Not worth engaging just yet. 9:30 opens up, form a high, form a low, take out the high, take out the low. Likely taking out the high next. 5-minute time frame. Candle didn't close yet, but it's about to close in 30 seconds. Like I said, we're still inside the range, so no trades. And we only saw the 2022 setup here on the 1-minute time frame without really tapping the fair value gap. The entry fair value gap, only the breaker block. But a 2-to-1 would have been easily hit. Right here, 7 points. Maybe it's just a bot and I kicked out all the free viewers for no reason. I don't know. Who cares? We've hit the reset button, but there's no... Anyway, I think I just kicked Matchbox. And listen to some music in the background. Like I used to before. I just thought it's nice to have some background music, but apparently not working out. Yeah, not getting involved in this range right here. Inside. Could go both ways, really. All of these use trader weight. You just have to pick the right option. So for take profit trader, that would be the CQG data feed. And with trade day, I think you get both options automatically. You don't have to pick a specific platform. So all of these funded account companies are integrated with trader weight, where you then can even choose to trade on TradingView itself. So it's either trade day or take profit trader. But overall package, I'd say, would have to be Take Profit Trade Day, because yeah, initially the challenge costs a little bit more. With the discount code in the description, you can save 20%. So it comes up around at, for the 50K account, at around $120. But you have to keep in mind, if you really know what you're doing and you're not just playing around like you most of the time do with the Apex challenges, then Trade Day without having to pay an activation fee is really, I'd say, the best choice. You have the lowest profit targets for the 25, 50 and 100K challenges. You have an end of day trailing drawdown, so not live calculated. And like I said, in the end of the day, if you know what you're doing, it actually comes out the cheapest, because you, even for the 25K account that I passed recently, I ended up paying $150 with Apex just for the activation, and only that is already more than what you pay with Trade Day outright. Take Profit Trader used to have a cool discount. They still have a cool discount going on, where you get, once you pass the challenge, you get the same account size for free. So another challenge, and then you just put them into a copier, and you theoretically have twice the margin. But you still have to pay for the activation fee. But at least the activation fee doesn't increase with account size. So with Apex, the bigger your account, the more activation fee you have to pay. Makes sense, of course, because that doesn't make sense. Of course not. From a business perspective, yes. Sell the initial challenge cheap, and once you get funded, you pass the challenge, everyone's gonna pay that money. Like, you don't really think twice about it. You pass the test, like, yeah, cool, let's go. And then most of the people still fail really in the hidden phase too, you would have to say. Where you still have to reach a certain profit target. And with Trade Day and Take Profit Trader, you can pay out as you go, really. Of course, with you're gonna have to worry about the drawdown, which is trading live with Take Profit Trader and end of day with Trade Day, until you reach your threshold, basically your entire margin on the account in profit. And then you can offset that, basically. Look at it as a safety pillow method, basically. Right, we open up, we snatch sell side equal lows, and we push back up. Take a look at NQ here. NQ is doing the same. But everything internal. Let's see, and go to the 5 minute. Take a look at DXY here quickly. Continuing lower. Bullish volume imbalance that could be used to deliver immediately into that buy side as an aggressive entry. We have our highest bearish fair value gap. Before we hit that buy side right here, we're hitting that just now. risk to reward ratio wise. 5 points. No. We kept holding support on this bullish right here, paired with the volume imbalance. So now seem to be respecting bullish order flow. This is a bearish fair value gap. The volume imbalance remained opened. So we're just going with the flow here until we are on the extremes. Then we check for 5-minute structure. We have to wait for that to be put in place, and then we can potentially trade a 2022 setup for the 66-day challenge. Until then, just gonna do some tape reading here. Take a look at NQ. Also hit that highest bearish fair value gap. And from a logical point of view, oh well, no, let's scratch that. So I'm interested if we see bullish order flow continue into buy side, bullish fair value gap right here, break in structure after taking out, yeah, short-term sell side, I'd say. Okay, so we know we closed above this bearish fair value gap, turning it into a inversion, just following price here. But we open with a bearish volume imbalance, so theoretically we closed above it. Well, that's the gray area because we immediately closed back at the high of it. But still, let's see if we use it as support to deliver into buy side. Just understanding that the risk to reward ratio here really isn't ideal. In terms of stop loss, risk management, we have an inefficiency below. Take a look at NQ. Q is also pushing strongly still, eventually holding that breaker block. Also understanding that we already hit major buy side liquidity here. So entering on this, even with your stop loss zone here, I don't know, maybe you use lower risk and you can compensate it like that. But, well, after hitting buy side and immediately pulling back, I'd say lower probability to go all the way back up into it again and to use the same setup that theoretically already kept holding support just very quickly right at the 8:30 news or 8:35 candle where it hit the high of our breaker block and continued to the upside. Take a look at ES, we closed back below it. See how that one plays out if we want to hold support on these things. Use a dotted line. Five-minute time frame. Inversion fair value gap right here. That highest bearish fair value gap. Eventually, look at that, even at lowest bullish fair value gap, right? Not lowest, but well, theoretically, kept holding support here, paired with the midnight level. Wicks below. The coupon code for trade day is, I don't think they gave me a coupon code. They only, so once you click on that link, that discount code should be immediately applied. That's what they told me. I haven't signed up with my own link, otherwise, well, they would detect that. But if not, I make sure I get an answer from them. Discord. See if we have any questions. You're longing a 5-minute short model. I don't see the short setup. We have a bearish fair value gap, yeah, but how do you want to quantify market structure here without picking a random low on 5-minute basis? On the 1 minute, yeah, we had the market structure shift delivery. Let's see if we just time close above it actually. I could even ask the indicator here really. So this time we actually closed above it. Now anticipating support. Short model ciao. Where's the market structure shift here? Here. Yeah, this one, yeah. I guess. Short model? Long? No. Okay, once again, buy side liquidity taken. Try to use a fair value gap to move into that. Open up with a bullish volume imbalance. So let's just keep on following price now that we are at the extremes. Respecting inefficiencies, having one left behind, nothing here, just consolidated, closed above eventually, tapped the old price. So that idea is gone. We had a bearish market structure shift right here. Rejected from the order block to retrace back lower into our, and there we go. Cut through buy side with energy, open up with a new bullish volume imbalance. Take a look at NQ. NQ also took buy side. So if anything, if there would have been a setup, I'd say, yeah, well, still not on ES because we didn't come from the low of the day. We didn't snatch that Asia sell side liquidity. So I'm pretty fine with not having taken a trade here on the trade day account. Just continuing the tape read. 9:56, so we get a new hourly candle soon. We left this volume imbalance open. Let's see if we use it as support, leaving behind a new bullish one right here. That's what I call going with the flow. Order flow. New bullish volume imbalance. Let's see if that remains open or gets closed in. Keep on pushing above that high. It is 9:57. Let's look at the hourly again. All right, that just happened to be a wick. Might continue to actually go for some hourly buy side here as potential buy side targets. in case we want to continue higher, these two highs. $15-minute, yeah, that lines up nicely. 5-minute, even 5-minute closed above. Bullish volume imbalance, we can see that so far on the 5-minute, this bullish fair value gap lines up nicely. A with this old high and B with the 1-minute fair value gap right here. This volume imbalance has been closed in. So we get the new hourly candle within the next 2 minutes. Right here we have our buy side from the hourly and 15-minute time frame above these levels. Holding support on that volume imbalance. Not worth the entry to me at that extent. But if I would, 2.5 points, target 5. Enter on the inefficiency once we see something that's going against the trade. Take risk off, cancel the entire position. Make sure that our losing trades are much smaller than our winning trades. Take a look at NQ here. Make sure we don't have any questions. Nope. New volume imbalance. Oh, come on, I wanted to copy. And that's the 9:59 candle. So in 20 seconds, we get the new hourly candle. Let's see how that plays out. And a new 4-hour candle as well. If we go to the 4-hour time frame, 15 seconds left. This 1-hour buy side is also a 4-hour high. 5-minute time frame, 1-minute time frame. First 30 minutes after market open, delivering to one side. We didn't feel, but we understand that this bullish volume imbalance right here is a bullish volume imbalance on the 1 hour, 15, 4 hour, 5. Unfortunately not filled on this fair value gap here. I didn't retrace into it. That would have been nice. This would have been too early for me with NQ really pushing lower and being super volatile. Still holding support on that lowest 5-minute here really, paired with the breaker block. So if anything, yeah, we already took out the old high of the day with this 830 push to the upside. Came all the way back to the downside. Still holding support here, delivering back up. Just not what I'm really looking for. Would have wanted this buy side to be untouched and then come back to our inefficiency and continue higher. Just makes more sense to me that way. Almost at that buy side. DXY is pushing lower. Nice rejection here. We keep on holding that 5-minute time frame, closing in 3 minutes. As of right now, no reason to believe that we're gonna reject from here strongly. We have to wait for some order flow confirmation. before we can say that with confidence. Like we did right here, we continue higher, take buy side, okay, we get the displacement, that's when we can say, might take some shorts. That's why we exited our position right over here. That's the 10:03 candle. 2 more minutes until we get the new 5-minute candle. I want to try it and see how well I can manage the risk. 5-minute, 1-minute fair value gap. If this doesn't hold support, I'm gonna get out. Have a safety stop loss at 2.5 points. I want to see the 50% ideally to be supported. Yeah, we still kept holding support. New hourly candle. Understanding the risk. Close below is an exit for me. Safety stop 2.5 points without doing too much damage. Alright, that failed. Here at least on the 1-minute, on the 5-minute, we also closed below. So that's good enough confirmation for me to not be in this long anymore. We will see. It might be wrong with new hour volatility here. But the 5-minute closing below, not really what I would like to see. Now I would be more interested to see if the bearish fair value gap here is being respected. This is a inversion fair value gap now on both the 5 and 1-minute time frame. Maybe just because it's a new hourly candle, I guess. Yeah. Yeah, that's unfortunate. But we did the same thing earlier, if you remember from the beginning of the stream, where we tried to go in long over at this area and we closed below. And what happened afterwards, that's the risk to the downside. If we would have waited for our 2.5 point stop, we would have been fine. Eventually, we still kept holding on this odd bearish fair value gap, resistance, no support. Likely going to continue into buy side. Bullish order flow remains. Taking a $50 loss here. Now we have a bullish fair value gap, a inversion fair value gap right here. Inversion fair value gap, we're tapped in. We use the same approach. If we close below, we either hit our stop loss. I usually give myself 3 chances. If that doesn't play out, then it's not meant to be. And I go back to paper. Let's see. Can we hold support on this? 9 seconds to go. Nope, we're stopped out. All right, so not gonna play it from here anymore. Now we reject back from buy side. Potential was there with that new bullish inefficiency. Let's wait and see. Immediately ignoring that. Short still in play. Market structure shift right here. Or break of structure. But without really having taken that higher time frame buy side liquidity. Eventually still holding this odd area. Head over to NQ and see what NQ is up to. Also retracing here, taking a look at the DXY, just continuing lower. But rejecting. Didn't close below this low, so we would only consider this as a sweep. We also swept this short-term low right here. Didn't hit our fair value gap that we wanted to enter long initially. So no break of structure confirmed with a body close. We still hold our inversion fair value gap, our highest inversion or old bearish fair value gap. If we snatch back, or if we simply push back above that, well, not trying the shorts at least for now. Taking a look at the 15-minute fair value gap after the market structure shift. We spoke about that, kept on holding perfectly, had the volume imbalance to the downside, but we closed it in. Disrespected the bearish fair value gap and unfilled volume imbalance right here. That's lining up nicely with this 5-minute. And also a 5-minute bullish fair value gap right here. We're inside of that right now. 1-minute time frame. Didn't fill the bearish fair value gap right here, but might confirm the break in structure. Send it up, trying the long, taking a small loss, and then with this new inversion fair value gap, still holding support, bullish fair value gap, we've been trapped here to the upside, getting stopped out right here. Let's see, if we get something clean, I'd participate for a third time. And the 5-point win would still put me in profit because the first trade, we cut our risks more. And the second trade, we lost 100 and, let me check on my trader weight, 102.5. NQ, diving deeper. Switch over to the 5-minute time frame. Well, I think if we want to continue into the buy side, the only area that really makes sense to hold support on is this 5-minute bullish fair value gap. If we break this and close below, we could look for the Asia sell side to be targeted, but this would be my last level of defense. At the same area, we also have a inversion fair value gap from the high on the 5-minute time frame right here that we could use as small confirmation or confluence to 50%. Right here, looking at it on a 1-minute time frame, still didn't tap the 1-minute fair value gap. Let's see if we have anything on Discord going on. Nope. Ooh, don't speak Spanish. $14 invites. It's a head-to-head race. So guys, make sure to use the Discord link right here. Hop in on the Discord right here and join the Trade Day Discord. This way we get the potential to win a Trade Day 50 or 100k account that I can give away in a giveaway. So if you haven't already, make sure to jump in right here. And hopefully this counts as an invite right here. We already have 14. Second and third place both win a 50k account. And the first place wins a 100k account. Not much I can do other than putting it out there. We've already been third place, but Paul got another invite. This challenge is going until the end of the month. We will see. Maybe plays out and we can host a little giveaway. Link is also right here on our Discord inside the announcements. Yeah, I have a second monitor. But I can only screen capture so much with OBS, so I try to do it all on one. Alright, so now when deep in our 5-minute bullish fair value gap, I'm gonna see if this bullish fair value gap here holds support. We also have our VBOB right here at midnight opening. That's where we rejected initially. Moving back away from the high of the day. Nothing really on a 5-minute to label it as a market structure shift. But we filled in the 5-minute bullish fair value gap now to the tick. Right here. Following it on a 1-minute time frame. Also the 1-minute fair value gap. Let me put them closer to where we are at right now. Closed right at the 50% of this 1 minute. From our 930 range, that's around 50%. And turning on the regular trading hours opening gap right here. Let's see what that's looking like once it's loading up. Right here, that's our regular trading hours opening gap. It's so small I almost didn't see it. Only this tiny little area. That's where we kept on holding support here, paired with the midnight, paired with the 5-minute bullish. Right here. Let it load up quickly. Too much loading time. Anyway, we saw that. No point in waiting for that now. Regular trading hours opening gap down here between regular trading hours and electronic trading hours. Someone mentioned that RTY, the Russell 2000, played out nicely again, leading the pack. Yesterday, Wednesday, putting in a nice top formation, giving a nice entry right here. PPI fake move up. Outside kill zone, continued lower. That's the 15. Let's look at the 5. Already down south. Let's take a look at NQ. Yes, it's also collapsing. Well, I wonder where we could have entered here really. But I think even on the 5-minute time frame, maybe the inversion fair value gap right at the high. Didn't close below this one yet. Well, this would be my make or break fair value gap if we see the close below that, really. No inefficiencies here on the 5-minute time frame. We perfectly rebalanced all this stuff. So we just moved back up to the buy side one more time before engineering liquidity below all these lows, before taking a sharp buy side. RTY giving us a clue of what's likely to come. We also had that 4 AM manipulation here. Very clean, and we never pushed back up into that like we did on ES and NQ. Might be worth a try to look at this one more. I give it a watch. So let's see if we close below this 5-minute. See what our risk would look like. And by the way, right now I'm not trading on the trade day account. That would be silly. We don't get a 2022 model. I'm just using that on my Apex account. Practicing with something on the line. Take a look at the 1-minute time frame. Below the VWAP, pushing lower, taking the sell side. Equal lows right here. That's the 5-minute. Back to the midnight level. That 5-minute candle is going to close. Taking a look at NQ, almost also at that same area. Closing back below the new day opening gap. Let's take a look at the 1-minute. 1-minute inversion fair value gap. Taking the sell side. 2.5 points be kind of tight here. Bearish fair value gap. Bearish fair value gap above here. No, I don't like that, I think. But I have one more shot, so I try. Looking at the 5-minute, no inefficiencies. Above, nope, nope. Looking at the 15, closing in 10 minutes. So I'm framing a short of this inversion 5-minute and bearish fair value gap here on the 1-minute. Right here. NQ is pushing up strongly. All right. Let's see, we already closed above the fair value gap, so I'm gonna get out of this. No point in taking the full loss here. Beats the purpose. I wanted to use this bearish fair value gap here because, yeah, it lined up nicely with the low of the 5-minute right here. But this strong push, closing immediately above it, yeah, kills the idea for me. At least before we hit maybe this bearish fair value gap up here. where my 2.5 point stop loss sits, so I just cut the risk early. Of course, there's still the odd chance that we don't deliver perfectly, which sometimes is the case, like we did right here. But it's not worth my risk. Trying to keep my losses small, and if I'm right, my win is big. So that's it for me today on the Trader8 account. This theoretically, following order flow, would become a inversion fair value gap now, where we would expect support. Taking a look at the 5 minute, still inside, still bouncing, making higher highs and higher lows. But no fair value gap we could use for that. No fair value gaps above other than inversion fair value gaps. So by this, at this point in time, we would have been stopped losing the entire 125. This way we got out with 55 with commission. Right here with that volume imbalance, good fill. NQ almost, negated this entire candle. That's it for me this session. Why the RTY is just selling off. I wonder what that would be like. Let's see how price moves here. Higher high, structure shift, bearish fair value gap, 930 opening, confirm lower, use the inefficiency, and from here on just sell off, like on its run. Let's look at yesterday PPI. Same thing that we looked at ES yesterday, bearish value gap, continuation, entry lower, even before the market opened up. 930 opens up, snaps the low of the day, I think. Yeah, low of the day. Bullish fair value gap, tap that, continued higher, using each and every bullish fair value gap as support. Go sideways a little bit while we're inside this inversion. Push up higher. Use the inefficiencies as support. No market structure shift here. Structure shift on a 1 minute right here, which failed. 11 AM, new hour, pumped up one last time, immediately negating all the bullish structure we put in place if we want to see the continuation. Shifting structure right here, bearish fair value gap, second try, 2022 model at the high of the day for a high of the day short. Getting in on that. And show what the risk is like. But let's say simply a 3-to-1 if I were to paper trade this. Trade limit order. How much is it per point? Or per tick? $5 per tick. That's pretty cool. How many ticks per point? I guess 4. Not 10. 10 decimals here. 87652. Yeah. Let's paper trade the RTY. Take one last look at ES. See why we were better off closing our trade right here? Of course, we could have said, yeah, now we're going to play it along. Just didn't see that on a higher time frame after negating orders, pushing back up. On the 15, well, I guess maybe tiny little bullish fair value gap here, but on the 1 minute time frame, bearish fair value gap, we close above, we use it as support. In that sense, now inside this highest bearish fair value gap here on the 1, but I'm done tapering for today on ES. Not gonna continue more here, even NQ, bullish engulfing here on the 5 minute after this strong move to the downside. Let's have some paper fun with RTY. 5 minute time frame, dozens of bearish fair value gaps here. Did we hit something major? Not really yet. Until 11 AM we have time. We hit the bearish fair value gap up here and reject. Disrespect the bullish, but let's call it a session here. At least for me, I'm looking 2022 model wise. 1 minute time frame, sure. 5 minute time frame. Well, once we close below the slow, we would get a market structure shift. But, well, stop loss placement in this scenario would be tricky. With our highest high being here, our market structure shift being here, that would basically be, 20 points. Of course, we have our target all the way to the downside, which could still be the draw we have buy side above. No. Not respecting fair value gaps that are on the 5 minute time frame. Maybe still that lowest one inversion, but feel pretty content for today. All right, let's check that out. We will need much more than 15 invites, yeah. That's why I'm trying to promote it. We'll see. Community should be big enough. Got a few people hopping in here. We should be able to get at least around 30, maybe not making the first spot, but, well, I don't know. It's not up to me. It's up to the community if they want to give away. Otherwise, well, at least we tried. And yeah, I think free tech stocks holding up the market. Good morning, RTY again. Do you trade RTY like you would simply trade ES and NQ? Really never looked at trading it, but looks pretty nice. So just going from today, 8:30 news. Where's our ICT all in one? So we don't have to do all the annoying lines and stuff. It's a CME chart, so that shouldn't be a problem. Previous day slow, previous week slow, Asia session. Look at it on a 5 minute time frame. See what we're working with. Calculation timed out. They decreased the calculation time again. The issue is that with putting all these ICT concepts in one, it's over 2,000 lines of code, and it really takes lots of time to calculate, and TradingView prevented putting many indicators into one, because that really saves you from upgrading to a premium membership basically. So they have a set limit with how much loading time you get per indicator. That's sometimes why you get that loading issue. Simply quickly switch time frame and it should reload immediately. Let's see one contract here with the RTY. On the 1 minute time frame using a 5-point stop. 10 decimals per point. I would have to get used to that. And do some backtesting. Backtesting tape reading, backtesting 2022 model on RTY. I don't think many people are even considering it, looking at it. It's only S or NQ really ever. I mean, you could do your risk management the same way. Nothing really changes. but you kind of, even just going to the 5-minute time frame here on the RTY, this seemingly looks like less manipulation. Let's take a look at Wednesday. London session, pump to the upside, snatch the sell side in terms of 2022 models. Yeah, right here. New York opens up. We shift structure. Highest stop closing candle between two lower lows. Comes our breaker block. We hold support on the breaker and deliver into buy side from there. And then up here, what do we do? From the high of the day, we shift structure to the downside, leave behind our breaker block right here, and a bearish fair value gap right here, and snap back down very quickly. Take buy side, continue lower. Eventually, that's even the 5-minute time frame. I thought I'm on the 1-minute time frame. That's pretty cool. On Wednesday, what did we see on Wednesday on ES? Still playing around here. I'm done for ES today. I'm just looking at a few other options. Wednesday, yeah. Comparison. Let's take a look at Wednesday in Q. New York open. Right here. Hard to tell the market structure shift. Not as clean as on the RTY. Gotta admit that. 1045. Short-term high cleared from the high of the day. Likely took some more buy side to the left, but not visible on the 5, at least right here. Nice. Let's look at CPI. Well, CPI is tricky, but London kill zone, 2 AM. We take Asia buy side. We immediately continue lower without really giving an entry opportunity, understanding that we hit the new week opening gap, this white line, immediately bounce back from it, anticipating the long from this inversion fair value gap, bullish fair value gap, and continuing up higher. We could have used any of these bullish fair value gaps to simply tape read price into the 5 AM high and then immediately walk away from that without really giving an opportunity to enter on the 2022 model, but it's CPI. It's okay. Hold support. We push to the upside. Let's see what happened after the New York open here on the 5-minute at least. Yeah, well, after such a pump, we also we only saw stuff on CPI or traded stuff on the 1 minute. Let's take a look back at ES. That highest bearish fair value gap kept up holding resistance. Market structure shift right here. Snapping away from that. And running without giving the opportunity to enter short, except for maybe a high risk volume imbalance entry. Not high risk, but aggressive entry, I'd say. Now finally going for that sell side, but no 2022 model that we could have anticipated. We didn't shift structure on the 5 at all during the New York kill zone, or at least 9:30 opening. I mean, we did right here and hit buy side one more time. Let's take a look at NQ. Same story here. Hit the midnight. Next sell side target right here, and then Asia sell side. Maybe we've seen a high for the day. The initial 2 trades that I tried to take was the continuation trade into some of this buy side liquidity, but seemed like we then had to continue higher, understanding that, cutting the risk wisely. Now based here on a 1 minute, right here, moving back to the upside, using inversions and all that as support, holding support on this lowest 5-minute bullish, continuing higher one more time, filling in this bearish inefficiency one last time, and then snapping away. If you understand that and you're quick enough to enter on the volume imbalance, or simply break in structure, or you jump in with a market order, if you do that, then, well, sell side, and yeah, the AM session low theoretically has already been hit regarding the market open. This is the 8:30 unemployment claims news, this dotted line right here, our previous day's low. If we continue lower, we could use this old lowest resistance, just anticipating that this lowest fair value gap is going to hold. But the way price has been moving away after taking sell side aggressively, closing above the 50%. We have two inefficiencies above our breaker block right here. Let's see if this lowest fair value gap keeps up holding. We have been bouncing off this area, like last time yesterday, where we didn't take the Asia sell side until I think beginning of the PM session at 1 PM. We finally broke below. Doesn't have to mean that same thing is gonna be happening today again. Can simply use that lowest inefficiency with that old low as resistance. Let's take a look at the 5. This would be our break in structure on the 5. Depending on the close. Well, let's see, that theoretically would still be valid at 1035. Coming from the high of the day, taking a look at NQ. Same story here, about to shift structure. Let's wait for this candle to close first. With a potential entry on this bearish fair value gap right here. Let's just see what that would look like. Stop loss 7.5 points. We didn't close below just yet. Open with a bearish volume imbalance. Asia sell side and 221. Perfectly lining up with that sell side. I think that'd be worth the risk. Forming a higher low, lower high, lower low, break in structure. But we first have to get close below to confirm that. Otherwise we label it as a sweep. But yeah, I think, let's see if we have any questions on Discord. What's the time for 40? New day opening gap, volume imbalance. Take a look at the 1 minute. Still in that lowest 1 minute bearish fair value gap, playing inside of it. Let's see. Free tech stocks holding up the market. Discord. No new questions. Yeah, alright guys. I think I consider myself done for the day. We will see if this is getting confirmed with the close below. We could either choose this fair value gap or this fair value gap as our entry. Ideally before we take out the sell side to continue lower. Same thing could be said about NQ as well. But this could be the capitulation, and we ended up holding that 1 minute bearish right here. Yep, that 1 minute bearish fair value gap ended up holding. If I would have had another chance going short, I would have tried that, but better stick to your risk management rules. Not putting too much on the line every day. So this would be the structure shift, bearish fair value gap entry. We still have to close below. I put it on the Discord. If the setup is confirmed inside the trade ideas, I just have to get going, take my dog for a walk, and yeah, set and forget. Put the trade in. We are rejecting pretty strongly here. We want to see the close at least below this low. Otherwise, we could just be chopping around in this area. We'd label this as a sweep right now. So if we get the confirmation for the setup, we could still take the short of one of these two fair value gaps right here for a little bit bigger stop loss. Safety stop above this high. Target the 2 to 1 down here. I would choose the higher fair value gap, to be honest. But first we have to get the confirmation. So unless we have any more questions on YouTube, I don't think so. Make sure to support Accumulation Zone by joining the Trade Day Discord using this invite link if you haven't already. Other than that, I'm pretty happy about today, even though I took 3 little losses. Sticking to the rules is important. Otherwise, yeah, you end up blowing up if you don't stop. I mean, the short here on ES likely would have panned out for 5 points. Yeah, 5 points would have been hit from our fair value gap entry low. That would have been a target at least. For one of the contracts, we reject once again here. Just consolidating a little bit. If the confirmation comes in and I place my limit order for the trade, I think I can do this on stream. TD accumulation zone, log in. This is we can also use the indicator to confirm. Break of structure, market structure shift. And Q already took out the low and rejected. Let the indicator load up. Market structure shift coming in right here. So we could use this breaker block right here as support, this lowest down closing candle, or this fair value gap right here. I think I'm going to use that, set my 2 to 1, create limit order. That would be too much risk, so I'm going to use micros here. Auto, not 1 minute time frame, 5 minute time frame. Limit order comes in right here. This would be the breaker. Like this. 9-point stop loss. $18-point target. Create limit order. 4, 5, $125 risk. Let's do 4 here. And one up here in that higher fair value gap. A little bit of scaling in. What do we say if we risk 4? We would risk 180 with 5, 225 with 6, 270. So with an entry up higher, I think we should be fine. Market structure shift is in with within our kill zone. We coming from the high of the day. We have our inefficiencies being left behind. We have Asia sell side and higher time frame sell side below. Still untouched. So that's gonna be the entry. 5 contracts, less risk. Put one more micro buy stop up here to get out of the position. And take profit target down here. All right. Yeah, that's gonna wrap up today's live stream. The order is in place for the challenge. Simply waiting for the market structure shift. We got the market structure shift. We have our inefficiencies. Doesn't have to play out, but it's a good setup within our timing window. If we're wrong, we're simply wrong. Can't really do much about that. But sticking to our rules is more important. I mean, yes, we could say no to this trade. Now we're filled with 5. Yeah, we're filled with our contracts from that higher fair value gap. Let's see, we could also manage our risk actively if we see it close back above these 5-minute fair value gaps where we framed the short from. Basically saying, no, all right, we are closing this trade because that's not what we would expect if we enter on a bearish fair value gap. 2-to-1 risk to reward ratio comes in right here. Let's see, I'm gonna let this play out. Keep everyone updated on the Discord. So yeah, thanks very much for tuning in today. If you haven't yet, help us win the trade day challenge for the community. Let's see if we have any new invites. We have 16 invites. Awesome, let's go. We're